TGIF. How's everyone doing today? Doing all right. Wrapping up the week, it looks like the dollar has run its course, at least for this rally. Maybe we're going to head back down towards 97.40. Here's your weekly. A little bit of a reversal week, not a key reversal. Sometimes I don't trust these kinds of reversals. I can say this, looking at the weekly chart, that this week's highs look pretty important to me. And if we penetrate those highs, 98.20, I think you're talking about par. You know, this looks like about 200. Well, let's take the range from here. 636, 180, 99.90. Yeah, it would take you up towards this 99 level, back up towards the highs if we get through it. Anyway, that's still an if. But I just was going to show you that, you know, some people can make a case that we're breaking this uptrend right here. Hey, Steve. Okay. No, I'm not doing my pantomime routine today, Steve. I was going to. But anyway, something like this, you know, starting to crack it. I don't see it. Okay. So the yen, which is, you know, has everything to do about risk, fought its way back with the S&Ps. S&Ps are giving up much more than the yen on the day. So here's your 4 hour. We did diverge here. I'm looking for shorts. I would love to see a blast to new highs in NASDAQ, which I thought might happen yesterday after this candle. But now the coronavirus is taking hold. On a weekly basis, NASDAQ's acting better, really about unchanged on the week. So unless we fall apart, there's nothing that bearish about these weekly candles, except I can say this, we do have a 2-week sell on the S&Ps. And then next week, we'll be looking at 32.96 as an off number. So possible that this is a failing rally. I tried it once. I didn't try it again yesterday. I did it Wednesday and then covered down here and didn't put anything out. Yesterday at the close right here, I was looking at it going, what if this is just an ABC and that's it and we're going to puke? And, you know, that's a possibility. You know why that's a possibility? Because everything and anything can happen at any time. Okay, so, you know, I have that mentality now instead of, well, you know, my bias and my scenario will play out. I'm open to anything now in this business. So I have taken to heart what I learned from the saying from W.D. Gann: if you don't learn how to change your mind, you won't have any change left. Okay, so just want to look at you know, gold did nothing wrong. You know, precious metals are still threatening upside action here, held where it had to hold, held where it had to hold. To me, it looks like when you look at this daily here that we're destined to test or take out these highs. And again, why do I think that? Is because we have a confirmed high here in gold on the daily, which was enough to create some type of reaction. But you rarely get important market peaks when momentum is confirming price. No, you won't have any change left. Or to mind, is that it? Euro is going to the moon, okay. It's having a decent week. You know, I bought it at 07 and took 20 pips, and can't argue with it. Sure held where it had to. But you know what? It's if we take out this week's low, Shahab, in the euro, it's not going to the moon. It's going to 108. Okay, so just like all astronauts looking for things, traveling to the moon, make sure you have your escape hatch ready. And I would say under this week's lows in the euro, you could give up the bullish case. But I could see both cases that we could get a rally back to 111, still fail. But I can't argue with you. I tried it down here. It was just so darn boring in here. You know, I just got out. And then I saw this. This was what threw me off. So, you know, there's something about your work. You're going to miss trades if you stick to your rules. Okay. Tesla's flying to Mars. Yeah. And my rules are, you know, this was a confirmed low. Maybe not to this, but I didn't have a divergence down here. Okay. I had one here, but this was confirmed. So every once in a while, my work rewards me more than keeps me out of good trades. So I missed it. I was there for this, but I didn't recommit in here. But I can't argue with you that right now it looks like the path of least resistance right now is to the upside. And I'm not going to reach for it here, and I'm not going to short it either. Okay, so some interesting action. I really think if you're going to have a bull move in euro, you need to turn euro pound around. Okay, I don't like to be a euro bull when this is happening. All right, so we had this initial launch here, and this was probably more due to cable weakness and euro strength. But yeah, it's holding in here. And I thought we might have, you know, one more shot down. We did. Actually, we did take out the low. So you have a nice divergence here. The low here was 83, 87, and the low here was 88. So another point. So anyone who bought it in here, they had their stop under this low. What do you think happened to them? So I'm just going to leave you with one lesson for the week because I have an example in front of me. So people say, Dale, how do you know where the stops are? I just tell them, imagine you're in a trade, you're long or short in here. Where would you have your sell stop? Of course, under the swing low, you know. Where would you have your buy stop? If I was short from here, they haven't gotten these stops. This may have been a little bit of stop hunt, but the point being, don't put your stops one pip below or one pip above swing highs. Give yourself some tolerance. Yeah, that's RSI, the real simple implicator. I think at least 25, 30 pips to allow for the algos to go for the liquidity and see if it's just a stop hunt instead of, you know, an important high or low that acceleration is going to happen from. Okay, write that down.
You know, Dale.
Yeah.
And good morning.
Good morning, bro.
Happy Friday.
Yeah.
You know, one of the things I want to point out, and what you're pointing out is great mentoring, by the way.
Thanks, man.
And I always like to ask people if they play chess. You know, when you're playing chess, one of the things that's going to make you a better player is thinking multiple steps ahead of what your opponent. You know, most people that are playing chess are thinking one step ahead.
Yeah.
You know, Like, okay, if I do this, what's my opponent going to do here? So what I try to do is I try to think multiple steps ahead in the market. And that
Nice.
helps me as a trader understand what I think is going to happen. So I'm like, okay, I'll take it a couple of steps further. I'll say, okay, this is where my stop's at. That's not where I want to be. But if somebody's going to trip my stops and then be a buyer, and they're going to be buying it down there on the false breakdown, and they're looking for a gain, where am I going to be a seller? So in your example, it's like, okay, yeah. So they're buying the euro pound below 84. But I'm going to be selling it at 84.50 because I want to capture this downtrend again. So they're going to try to play it on the counter trend long as they squeezed out everybody that was short. Then they're going to get long, and then I'm going to go ahead and play it back on the short side up here because that's going to be a 50% retracement of the most recent move lower.
Yeah,
and then,
put your charts up, bro.
yeah, I was just using
okay.
your chart that was there.
Oh, I see. Okay, yeah. So you're going to go with the trend. You're already planning what you're going to do, and the market's not there yet.
Right. Like, so let me give you an example because I happen to be trading the euro. Well, I was this morning. Let's get you my chart. Okay, so I've been playing the euro long, just so you guys know, off of this big 618 retracement. If you're a ForexAnalytix subscriber, you know that back here earlier this week, on the 27th on Tuesday, we hit the 618, and I'm like, okay, I'm now shifting to playing it on the long side. And so all these dips I've been playing. Like overnight, I bought the euro at 110.24. And if you were in the ForexAnalytix community, hey guys, if you're listening in right now, I'm just going to put you all on Jumbotron so you can say hello. This is the ForexAnalytix community where we're all chatting. It's Friday, so it's probably fairly slow. There's 70 people in here right now. And you can see all the charts that we post, and you can go back and look at them all. And
what a cool chat room.
Yeah, it's cool. You can see I've been chatting there. This is just since I got up this morning, so you could go all the way back, all the way. You can see I'm posting some charts there all the way back. This is all this morning. The last 2 hours. So. So everybody that's on Jumbotron, you can see there's Amir, there's Nidish, there's Stelios. So anyway, that's not what I want to talk about. There's Benedict. And what Nidish post? Oh, and he's posting. Salma Hayek. By the way, that's the peso. If you guys want to know, we call the peso Salma.
Yeah.
Because when she dances, we have a lot of great gifts for when she dances. Anyway, as I told everybody, I was long the euro down here. I got hit at 110.24. It was trading at 110.28 when I got up this morning. So I was long, and when I jumped in the chat room, I let everybody know, hey, I'm long. Big inverted head and shoulder pattern, a break above 110.40 was a breakout. So I was long when we got to 110.44 and a half. I sold it. Now I'm trying to buy dips again because now I know that everybody's getting long on this this move. I may not get an opportunity to buy it back, but I'm going to try to buy it back down here. Damn it, and then look for a move from there higher. That's what I'm attempting to do and playing it back to 110.80. So ultimately I'm looking for a lot higher levels. I'm looking for, but anyway, that's how I'm trading it. But just thinking ahead about how you hold on really quick. This is from Citi. So this is just came out just now. They're expecting US dollar selling against all major currencies today. So just in case you got that,
rebalancing
just hit my inbox just now. But that's we've been hearing that there's going to be month-end US dollar selling anyway. So there's a few things that are weighing into the euro this morning. You got, obviously month end right now. I was going to talk about the euro as being a funding currency. The euro, one of the top currencies to be trading when the stock market is going straight up is short euro Mexican peso. Why is short euro Mexican peso? Because you get a hell of a huge carry every single day. Every single day you sell euros, buy pesos, you make, especially on, big sums of money, you make a good chunk of change, and you don't have to do anything but sell euros and buy pesos, sell euros and buy Turkish liras, sell euros, buy Aussie dollars, sell euros, buy dollars. Hell, if you sell the euro and you buy dollars, you make money overnight. It's a carry trade. And if you guys never seen what happens during carry trades, when carry trades go wrong, well, just go look at the dollar yen. Actually, you know what? Better yet, go look at the Aussie yen and then go back to 2005. And you can see what happens when carry trades go awfully wrong. Okay. This is what happens when carry trades get liquidated. 2000, all the way from 2005, a couple of these blips here, but then obviously the
financial
big
crisis.
Credit crisis, the housing crash, that was all carry trade liquidation. So, I've been warning people for a long time that, if we get risk off, the euro is going to go higher. People are like, well, the dollar is a safe haven currency. Yeah, ultimately. I mean, if we're down 25% in equities, people are going to finally go, screw it. I got out all my carry trades. I need to buy back dollars for safekeeping. But when you get to a stock market that looks top heavy and people are now threatened that we're going to start breaking down, you're going to see carry trades get liquidated first before the dollar becomes the quote unquote, soup du jour as a currency to hold during risk aversion. My assumption is the first 10% of a liquidation in equities, which let's just say that's 13%, but the first 10% at least, maybe even more, will be all dollar selling. So if you think about that, and you guys have to understand that I'm not a euro bull. I'm not a eurozone bull. I'm not a euros going back to 140 because Europe is so great. I'm not in this camp. I'm not. I am in this camp though. We get some risk off, the euro could be very easily trading back to 113, 114, just on a reversal of carry trades. So there's a lot of risks right now. Let's talk about the risks that we have in the market. The risks are
number one,
the coronavirus, right?
Right.
That's a risk.
I mean, if from what I've read, that you can't find surgical masks anywhere.
No, I mean, I had to go to several different spots and then actually find a woman that was hoarding them at a CVS, and sweet talked her ass to give me a box of 50, which is not a lot. That'll get me to the grocery store and back a few times. If I just.
Well, in Wuhan, there's no food.
Okay. Yeah, then there's no food. But
I
don't want to. I'm not fear mongering here. But let's just talk about, like, the incubation period is a lot longer. The mortality rate is a lot higher than
we were led to believe.
Well, no, I think at a 3% mortality rate, that's pretty high. And
Okay.
the fact that we get we had this happen at the worst possible time in China. Everybody's traveling around, whether it's throughout China or outside of China, for Chinese New Year. So you have this virus that hit just as everybody is already scattered across the globe. So I still believe that it'll be contained. It's just, I think the numbers could be worse in the next few weeks. So And if they continue to worsen like they did yesterday and over the weekend, that is a big risk, because now you're talking about China's GDP getting sliced from 6% to maybe 3. They're already talking 4, but you get China's GDP slowing down to like 2 to 3%. Remember, China is a huge part of our supply chain. So, that just puts a cramp on global growth big time. And not to mention that just the death tolls are going to probably be pretty ugly now, and it's probably going to be mostly centered in Asia realistically, and we're probably going to be able to contain it. And so I'm not thinking global pandemic or anything. I'm just thinking that it's probably going to get a little worse before it gets better. Therefore, those risks are probably going to be highlighted and accentuated over the next couple of weeks. Do you know what risk number 2 is, Dale?
No.
Feel the burn.
Oh yeah, and political. Yeah.
Yeah. Okay. So the Iowa caucus is on Monday.
Yeah.
If Bernie Sanders wins the Iowa caucus, which there's a good chance that he does, the market's going to start pricing in the Bernie risk. And the Bernie risk, I think, is a 5% correction in equities minimum, just knowing that he's a risk.
He's going to make speculation illegal, I heard.
Well, that's neither here nor there.
I knew that would stop.
The fact of the matter is, if he wins, and then we're talking like obviously in November, the risks are, we're talking probably north of 20% loss of wherever we're at risk. But just the risk of Bernie Sanders being even in contention, and when you look at polls that are near 50%, the market hasn't priced that out. So looks like the cable's on the move. Cable's reaching for this triangle resistance right now once again. But you get the S&P that could really correct on coronavirus, political risk. Now you might look at me and go, well, Blake, the impeachment hearings are going to end today and he's going to get acquitted. Tell me one person on the face of this planet that believed that Donald Trump was going to be impeached and removed from office today. So go ahead, tell me. And if you are the most gullible person on the face of the planet, right? So everybody knows that Trump is not going to get impeached. He's not getting removed. He is going to continue on. And that news is not news. So he may get up on the pedestal tonight during his post Friday, talk about how he's not getting impeached and it's a big witch hunt and blah, 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 blah. But we already knew that. So to be buying based on something we already know is priced in the market is silly. What's not priced in the market is Bernie Sanders and I fear Bernie from a lot of levels, and I don't want to. I'm not going to turn this into a political talk, but
just think if you're Larry David, and then you're going to have to play him all the time.
Oh my God, poor Larry David. He's going to have to play Bernie Sanders on Saturday Night Live.
He's a genius.
No, I'm just kidding.
But
not turning this into a political talk. I just want to say the risks are heightened, and he scares me. I am a registered Republican. I'm not saying I'm a Trump supporter. I'm just saying I'm a registered Republican. But
Blake,
he's scary. And
Blake, I think you should be scared more about the potential of not getting one of those.
Let's not turn this into politics. Let's just talk it.
No. It's a comment that is not political.
If Trump gets reelected, all is good, and S&P is going to trade higher going into this next year.
Oh, there's no question about it. The markets are going to celebrate.
Yeah, but the near-term risks, Steve, are that he surges in the polls, and people start going, "Oh crap!" I'm not even thinking about Bernie Sanders as being a risk.
I know. If you ask Dale, I've been warning about that. How many weeks is it, Dale, that I've been saying that Bernie Sanders is something that the markets are not pricing in, and I think they should start pricing that.
Yeah, but Steve, when it becomes real, we've been talking about this for weeks. We understand that.
Yeah.
But what makes it real is Monday.
Oh, I agree with you.
And it's this Iowa caucus that's a really big deal. So we got that. We've got the virus. People, there's a lot of weekend risk. If the numbers continue to increase and surge And remember, the incubation period for the coronavirus is 2 weeks, that they say. If this continues to worsen over the weekend, and then you have the US that really starts to clamp down on travel to China, you know, non-essential personnel type of thing, or starts, you know, blocking flights, I mean, things could get progressively worse from a risk aversion standpoint.
Yeah.
So the reason why I'm mentioning that is because I'm looking at the S&P, and everybody should know right now that while we're above this trend line here, I'm not terribly worried about the stock market, but as I guess I drew this yesterday, but I'm obviously, I extend these all over the place just to accentuate what I'm talking about at that moment. But the move below like 3240 would be pretty devastating from a technical standpoint. So you guys that are, you know, there are risks that we can gap below these levels over the weekend. You have a situation where, yeah, if Bernie Sanders starts surging, you see coronavirus numbers are not getting better, but they're getting progressively worse. And again, I think that the risk is that they can, because of the just how much travel had been done right as the virus broke. I mean, the timing could not have been worse for China and the world for that matter. So anyway, just those are the things I wanted to talk about. We do have really quick, we have data coming out, right, Steve? I'll take you through this data because I'm not going to be trading. I've already cleaned my book for the weekend, so I got suckered into going to I call it sucker. I'm going back to the Phoenix Open today because I got great tickets with a buddy. So I'm gonna go enjoy some free booze and free food and sit in a booth, so I can't turn those down when I get them. So I'm really not going to be trading. So this is the data flash, guys. This is included with your ForexAnalytix subscription. You'll see. Hold on, let me do this. Let me move it out of the way for a second. You'll see that data flash is almost as fast as Bloomberg. So here's data flash. This is my Bloomberg system. So if you guys, you know, want to know what Bloomberg, the news panel viewer from Bloomberg looks like, this is it. All right. This is what my $2,800 a month gets me. All right. So we have personal income, Canadian GDP, personal spending, you know, so a lot of the PCE stuff is very important from a Fed inflation standpoint, but I really want to have Canadian up here because the dollar Canadian is in a, let me move this out of the way really quick. The dollar Canadian is in this ascending wedge, but I'm more worried about that the dollar Canadian is going to break out this way, and I'm very bearish the Canadian currency right now. False breakdown through a multi-year trend line is going to lead to a reversal higher. I firmly believe that, so I am bearish Canadian. I'm just not. I'm not necessarily bearish right at this moment because we are in ascending wedge. So I think there is a risk that the dollar Canadian can pull lower before going higher. Because I'd rather not chase it up here, and I'm not trading it today on a Friday anyway. But you guys will see how fast this data comes out. So I want to say good morning, Steve. Good morning, Stelios. You guys,
Good morning, Blake.
Y'all here.
Hello.
We have 1 minute before the news comes out, right?
Yes. Core PC is the big one in the US and Canadian GDP, like you said. So, okay, let's wait for that, and then I can
Let's see if we're going to get more bad
then
data
as soon as this
from
comes out,
Canada.
I'm going to pass it over to you guys, but I thought I'd be here to show you how fast that the data flash is versus you can do a little speed comparison to Bloomberg. So,
yeah,
and watch these numbers right over here versus these numbers right over here. So, and we've got the Canadian on here. So let's watch this Canadian GDP. Let's see, expecting flat year over year, but month over month flat. Let's see if we get that improvement. If we do, maybe the dollar Canadian will come back to 132.15 or so.
Okay, 5 seconds.
Moment of truth.
Kaboom.
As it seems, the data are delayed.
No, just now.
There they go.
There it is.
Literally 2/10 difference.
Yeah, data is pretty good out of Canada. PCE was basically, I mean, PCE was up a little bit, income's down. But see if this Canadian will come down a little bit. I actually think the dollar Canadian is a better long down at 132 than it is up here, obviously. So, but I have no position at this moment. With that being said, I'm going to pass it over to you guys. And remember, we do not have the daily roundup webinar today because it is Friday. We don't do them on Fridays. But guys, if you want to be part of the ForexAnalytix community, it's only $1 to try us out for 10 days. Doesn't matter which version you get, whether it's the premium or the light version. The light version does not include the chat room and some of the advanced analysis, but you can still get all the mobile apps and use either version on the mobile app, which is awesome. So try us out. It's $1 for 10 days. Can't beat that for $1. Guys, I want to wish you a great weekend, and I want to thank you all for being here today.
Thank you, and enjoy the golf, man.
Thank you, Blake.
Yeah, I'm going for a few hours. Free food and free drinks, and a lot of eye candy.
Yeah. Oh, I'm telling you.
Let me call Lisa.
See you guys. Bye.
Bye. You're bad. You can't take the Marine out of Blake, can you? All right. So how are you guys today?
Good. How have you been, Coach?
Good, man. I'm tired. By Friday, I'm just, I barely feel like trading by Friday. You guys ever feel like that? I mean, you're half my age, so you probably don't.
That's why we feel it by Wednesday.
Good one. You feel it sooner.
Man, I'm at home. Both my daughters and my wife have this H1N1 virus, so I'm doing everything. Somehow I haven't been infected, so I mean I must be Iron Man or something.
Good immune system. You had it a month ago.
I think I had it.
I've told you guys. My son had last year coronavirus. Actually.
Oh, wow.
No, I'm not kidding about it. He actually had 2 viruses, as we found out by doing like a special panel at the same time. That's why he had like very high fever for like 4 consecutive days. It wouldn't go down, and we had to hospitalize him. He had coronavirus and another one called adenovirus.
So he was patient 0, was he? Damn.
Jason started the whole epidemic.
Indeed.
Okay, right. So going back to markets. Today we had some interesting data out of Europe. I don't know if you guys caught it. What was it? French? What was it? Italian GDP negative, and also French GDP negative as well. Unexpected. Why not? They were both expected positive. They came in minus 0.1 for France, minus 0.3 for Italy. German retail sales expected minus 0.5%, came in at minus 3.3%. So
the only problem, Stelio, is that the Europeans have not gone so deep in the game of rigging the data. Once they start doing that, everything is going to be fixed in Europe as well.
Yeah.
They just have to improve on that.
Yeah. We also had Eurozone CPI unchanged at 1.4%. Sorry, expected at 1.4%, came in at 1.4%, in line and marginally higher than last reading. Still quite a bit below 2%. And if you recall, Christine Lagarde has said that it is expected to stay at low levels. So this is not a surprise by any means. But really, the main thing everybody's talking about now is still the coronavirus and how this will spread. And I definitely do not want to be long risk over the weekend. That's why.
Yeah, I think it's crazy, honestly. And the first chart I showed today, Stelio, in the chat room, when we were up there, is that I'm tracking this channel as possibly a corrective channel. Confluencing also with the 50 daily moving average and the 61.8 from this move lower. And I said that below there the risks are for another move to the downside. So I think that was a great opportunity. The jump that we had up there yesterday, we basically based on no reason other than a couple of companies beating earnings expectations, but the risks that are currently looming are much, much, much greater than the performance of a couple of companies.
Yeah, I agree. And think about it. If we get at some point a declaration that, look, this coronavirus, there's a cure, or a vaccine or something, or it's contained, okay, the market's going to rally, but they're not going to rally as much as they're going to sell off if this thing gets bigger and bigger. And anyway, personally in our family portfolio that I manage, we are now 0% in equities. Sold everything today, and I just feel a little bit scared about this whole thing. I might be wrong. I've been wrong many times in the past, but it just feels like it's...
In this case, it's better to be wrong and be out of the market than be right and be in the market, because that's going to hurt.
Yeah. So, yeah, other than that, today's Brexit day. Congratulations, UK. You're out of the EU, and
Indeed.
See what happens next.
After a huge drama, yeah.
Yeah, I have quite a few friends in the UK. I mean, I lived there for over 16, 17 years, and half of them are celebrating, half of them are really sad. It just mirrors the split on the vote, right?
The split on the vote, yeah.
Yeah, so time will tell whether this was a good or a bad thing.
Exactly. What is most important in this case, Stelio, is to give it time, and because time will tell which of the two was the right decision.
Yes, absolutely.
Yeah. Okay. Anything else, mate?
No, that's it. Apart from that, nothing else major out.
Cool. So let's go on the charts. I already started by one of the most important charts today, and it is this one, the S&P, with this channel. So, it's all about that almost 3,300 level, 3,297. In my opinion, below there, you should be very, very careful. And as Stelios and Blake mentioned, I think it would be very naive going long risk in the weekend because there are much higher chances that you're going to find yourself a lot out of the money if something happens during the weekend that is negative than the opposite. So, in my opinion, you either go short risk on the weekend, with the possibility of getting something that will move the market quite a lot to the downside, and it's going to gap lower, and that might prove to be a runaway gap, or you go neutral. In my opinion, anything else is very, very risky. Not a risk I would want to take in any case. So having started with that, we can then go to the metals because we already have some questions about them. One of the charts I showed earlier today in the morning in the chat room was the copper chart. Copper is actually in its 13th consecutive down day. You can see here on the 4-hour chart, you can see how, vertical this move to the downside has been. And if we go to the daily chart, you can also see here, we got rejected from a nice resistance area. You can see it up there. And to be honest, I expected that we might see a move back to the channel. I didn't really expect that we're going to get 13 consecutive down days. We've, in essence, moved like 13% lower in 13 days so far. So this has been like a huge sell-off in the metal. One of the probably, I went back to the data quite a lot. I didn't find 13 consecutive down days. So I wouldn't rule out that this is some kind of a record. Now, having said that, it's obviously very oversold. So, I'm not advocating that somebody should be selling copper after 13 consecutive down days and 13% lower. But I do think that after this move, any rebound might prove to be shallow, and more sell-off might ensue. Now, we had a question about palladium from a friend, and if I'm still bearish, the answer is I'm absolutely still bearish, and you can see here on the daily chart why. Quite a strong 3-day sell-off, especially the third day was like a massive, it was close to 6.5% lower. And the price action that has followed in the 3.5 days is clearly corrective. Even if we go to the 4-hour chart, you can see that this is most likely a corrective consolidation before a continuation lower. So I'm still holding and I'm not letting go to the rest of my position here. I now have no risk on the table. So I'm definitely looking for more downside, with 2,160 being the next downside support. And after that, my final target, which is at 2,000, I'm going to be more than happy if we make it there. I'm not going to get, too greedy following that, because if we actually make it there, I'll be roughly 18% in the money. I mean, I will have made 18% return, which is like something amazing. It's usually, like half to 2/3 of my performance in a year usually tends to come from 2-3 big trades. Last year it was from crude. This year it looks like it might come from palladium. Because what I usually do is, I'm monitoring some trades that I believe can really get moving. And I like to participate in a few of them. And, if these work out, they can actually make or break a year for you. So I think that palladium has a good chance of being, one of those trades, and, start the year, on the right foot just because of that. Now, having said that, let's have a look at platinum as well. Wait, let me go to the platinum. Has been pulling back. I had warned in advance that, platinum was testing some important resistance there. But it's now, as you see, I drew that. Now it's now approaching a quite significant area of support. So I would start being a little bit careful with downside targets here at 955. Now, there is a chance that we can move even further lower from here, and specifically down to this broken long-term trend line resistance, which might act as support. So it's not that I don't believe we can move even lower, but I would, once we go back to this trend line, I would be very, very careful with being short platinum. So, if you want to be long, you can attempt doing so here. If not, you can do it a little bit lower. Now, gold and silver, nothing much has changed. I mean, as you see, they remain very well bid. Here is gold. Here is silver. Gold has already broken out. Silver hasn't already broken out, but this looks like a bullish consolidation to me. So I would expect that eventually we're going to get a breakout here as well. You can also pay attention to this trend line resistance on the
Hey, Steve,
RSI.
I'll be back in 5.
Okay, Terminator. I mean, coach.
All right. I used to lift with Arnold in Venice Beach. In Venice Beach, man. Honest to God.
Are you serious?
Yeah. Yeah. It
So
was
you met him?
Yeah. And Stallone
he
worked
seems
out there.
he seems like a really nice guy.
Yeah. He was. He is.
He's
Yeah.
alive.
My friends used to call me Hollywood. All right. I'll be back in 5.
Okay, coach.
All right, bro.
So,
Terminator.
having to do with cable, if you remember, I warned a few days ago that be careful because, if it doesn't break to the downside, it's most likely going to break to the upside. And we're there. We're testing this trend line resistance, above 131.80. Not only we will have broken above this triangle, but we will have also posted a higher high. So, my thesis remains above 129, 129.20. Respect the possibility of more gains, and especially above 131.80. I think it's going to be a huge mistake trying to fade that, because I do think that we can retest 135.15, the previous high that we had mid-December. Now, having to do with USD CAD, we had quite a few questions yesterday about it as well. USD CAD, the level you should be paying attention to is this one, almost at 133. You can see this formation. Oh, wait a second, actually. Let me redraw it. Okay, there we go. So roughly 133. Bottom line, we have these previous highs there. Above these highs, I think USD CAD is going to be producing a lot more upside. Now, the closer we get to 133, the better your chance of playing a rejection and a resumption within this triangle, which is also a valid possibility. Now, shorter term speaking, USD CAD is currently testing a confluence of resistances. If I zoom in, you can see it here. It's the 78.6 of this move lower. It's also the 200 daily moving average. So given the fact that we've already moved from 129.50 to almost 132.50, I think you should be careful here because we might see a temporary pullback, something like this, that might produce a better buying opportunity. But then, if that's the case, we should face that long-term resistance, and that's going to be decision-making time for the USD CAD. So that's more or less how I envision that price action might play out from here. Likely a pullback towards 131.50 to 131.70, perhaps more upside from there, and then we test this longer term triangle, and the pair makes a decision of if it actually wants to break to the upside or not. So that's what I think about USD CAD. Question, can you tell? Yeah, I can mention, Steve, the World Health Organization announcement yesterday meant more help is on the way, stocks rally. Yeah, Joe, I mean, but I still wouldn't want to be long risk during the weekend. I think there is a higher chance that we're going to get negative news that are going to affect the market than the opposite. And I think that positive news are going to affect less to the upside than negative news to the downside, because the market is still clinging almost to all-time highs with so many potential headwinds on the way. Trump scares us 10 times more than Bernie. Jim, and what I'm saying here is not a political comment, it's an economic comment. I would tend to disagree with that. But as an outsider, let me tell you that if I was a Republican, I would rather get Bernie Sanders getting elected now than getting another term of Trump and getting the economy blow up in his hands, because then you're going to get probably somebody even worse than Bernie Sanders in the 2024 elections. So, that's my point of view. So I think that, getting a socialist Democrat is going to be bad for the economy, but probably it's going to be even worse if we have another 4 years of a Republican. So the problem is was not going through comments fast. We have a question like Tesla is flying to the Mars. Yeah, Tesla has gone completely nuts. It's pricing in rainbows, unicorns, and I don't know what else. But a lot of stocks have actually gone vertical. I mean, look at this. Look at this.
Wow.
This is the usual price action you see in exuberant moves, which is the following. You get some type of a consolidation, then you get a move starting to the upside, then you get a more vertical move.
That's a
more vertical
breakaway
move.
gap.
Yeah, more vertical move to the upside. Then you get an even more vertical move to the outside. And when you think that it can't get more vertical than that, you get even a jump higher from there. So in essence, if you zoom a little bit out in the chart, it has literally gone parabolic. So
now show them Apple, and they'll see what happens after a parabolic move, or what could begin to happen.
Yeah, what happened in Apple in that case, that was the equivalent of Apple. It was that last phase up there.
How about up
And
here?
when that happened in September of 2018, Apple tanked from 233 down to 143 within quite a short period of time. And we've now entered the same type of phase. I mean, here is Apple. We've already seen Tesla. Here is Microsoft. There is
Oh, yeah.
Microsoft, which
Yeah.
has also broken out from an already. I mean, we had this ascending wedge. We broke above it. We formed this ascending channel, which it's even more inclined. And
They're on
now,
the blow-off stage.
yeah, I mean, this is clearly a blow-off stage,
Yeah.
right?
Yeah.
And if we zoom out, I mean, this gives you a very good idea of what a parabolic market looks like. I mean, look at this. We started in 2010 with Microsoft being at $24. And it's not only the fact that in 10 years we've gone from $24 to 173, but it's the fact that the pace of acceleration has kept increasing the higher the price goes, which is counterintuitive. I mean, this is the epitome of a blowout phase in any type of market. I mean, no disagreement. Microsoft is a great company. It has a great business model. It's going to be there even after the next recession, whenever it comes, sooner, in my opinion, rather than
Boy,
later.
would Jesse Livermore be salivating at these markets right
Oh
now.
yeah, oh yeah, absolutely. But this type of price,
Or
is-
committing suicide.
yeah, yeah. I mean, he was a very binary kind of guy, right?
They didn't have bipolar diagnoses then.
I don't think he was bipolar. If he was, he wouldn't be able to be successful. He was depressive, but bipolar people are manio-depressive. So
so he
when
was
he
like
wasn't
me.
depressed, nah, you're not. You're not. You don't have maniac phases. Trust me.
I have depression.
You would know it.
Huh?
People that are manio-depressive during the mania phase, you can't
I don't
even
have mania.
No, you don't. Trust
I
me,
just
you don't.
have depression. I'm sad to report I have depression. Anyway.
Yeah, on occasion, the vast majority of humans get depressive phases.
They used to call it melancholia.
Melancholia, yes.
Yes.
Melancholia, yes.
That's not a Greek word, too, is it?
It is a Greek word.
Everything.
It comes from the words melan, which is dark, holi, which is holi is the what's
Dark
the English word?
Mood.
No, I'll tell you. You know the word. It's gal. So melancholia comes from those two words, actually.
Huh.
Yeah, you see? Interesting.
Yeah. Well, anyway, Microsoft and Apple are manic.
So yeah, I mean, vast majority of the big. I forgot Amazon because yesterday Amazon.
they beat. Yeah.
What did I do wrong? Isn't this the ticker? Did they remove Amazon? Am I wrong? Did they actually remove Amazon from?
I can't believe it.
TradingView. What the hell?
Bezos didn't want the charts up there anymore. No symbols.
That's quite interesting. I've charted Amazon plenty of times.
Yeah.
Okay. I found it as saved in my. We haven't seen today's price action. So today it's at all-time highs, I think, Coach.
Yeah, it is.
So today I think we're going to open. Last time I checked overnight, it would open somewhere here.
I don't know what I was looking at NASDAQ, and NASDAQ to me looks like we could squeak out a new high here. I mean, it's not that far away.
No, it is very, very close, actually.
Whereas S&Ps might get back near the highs, but I think this will be the first time in a while that I could remember NASDAQ, if it does, we could come in sharply lower Monday.
But by the way, even if NASDAQ posts a new high, just look at the huge RSI divergence that we're going to have, right? I mean, previous RSI reading was 82, 83, whatever it was.
Yeah.
And it's now still below 70, although it came very, very close to the all-time highs.
I just can't remember the last time NASDAQ will make a new high without the S&Ps being there. And S&Ps right now are, 50 handles away.
And keep in mind, NASDAQ almost at all-time highs. Of course, the VIX is an instrument based on the S&P, to be honest,
Yeah.
right? But look at the divergence in the S&P. Not only we were diverging, not only we've broken out
Nice
from
back test. Could have maybe
but,
one more if we rally.
yeah, but we've back tested it in essence, and we haven't even broken down below it.
Yeah. So if it
I
back
still
tests
think,
again, you buy more VIX.
yeah, so I still think that the risks are tilted for more upside in the VIX, at least another spike higher towards 25, as I was saying, at the beginning of the week.
Yeah, it's going to be the coronavirus fear, I think.
Now, at the same time, despite having, if you remember yesterday, I talked about USD yen saying that 108.50
Nikkei was the weakest.
Yeah, that 108.50 was a good area for a rebound, and we actually went to 108.54, 55, so 5 pips away from that, and we did get a nice rebound at the end of the day yesterday.
Given half back here.
Yeah, it's given half back, and at the same time, the Nikkei is again testing this support, and it looks quite heavy to me. So it looks likely to me that we might open up lower on Sunday and gap lower on all those instruments.
Good point.
So I intend to keep my short position. And I think, I have a decent chance of being in the right side of the market. I've anyhow taken a little bit of profit, so I don't have any risk. Of course, if we get very positive news and we gap higher, I can still be on the losing side because my market order cannot be triggered while gapping higher. I mean, it will have to be triggered, when we gap. But I'm perfectly willing to take that risk. Everybody, of course,
Steve, your platinum top pick is one of the best I've seen in many years.
It wasn't exactly top picking because if you remember, I had to scale in three times.
Well, that's
I started shorting it from 23 and change, 2300 and change, but I was very, very confident that that was the last phase of the blowout.
Well, sometimes it's very good to be early because it gives you a chance to build your position. If you had immediate gratification, you'd be 1/3 in instead of all in like you were.
Oh, yeah, of course.
So, I don't mind being early for that. If you use reduced leverage and a market takes time before the move ensues, it gives you time to build the position and also view the technical action to confirm what you're doing or
of course,
get
it's
out of
easy
the way.
to say so on the webinar, but needless to say that I had to persuade myself a couple of times before it turned lower that it is worth taking the risk I was taking, which at some point I was risking something like 6% of my account, which is something I very, very rarely would do. So I had to persuade myself that, I had every good reason to do so, and I strongly believed in that, and I should just, suck it up and.
The battle's in our head.
Yeah. No, I had to go through that. Yeah, I had to go through that. I'm not going to lie to you.
Yeah. Okay. You're gutsy. You have to be gutsy.
Sometimes you have no alternative because the alternative is screwing up, actually. So, Yeah. Now, the FTSE has already lost that area of support we were talking about, but still remains within this larger triangle. So, nothing to do here. We need to break below 7,200 for this to mean more. And the DAX is actually testing. I mentioned that yesterday. Has already broken down from this ascending blue channel and is now also testing this red channel. So the DAX below 13,000, I think is going to be quite a bearish event as well. So as you see, the vast majority of risk assets are positioned in key support areas, which is a double-edged sword. I mean, somebody can say, okay, this is a great level to buy them, because we are at support. But as I said before, I'm still an advocate that the risks are tilted to the downside. And if we are to see a big move on a Sunday, that's probably going to be lower than it's going to be higher. So I will again advise against holding risk on exposure unless it's very, very manageable or you're in the money during the weekend. I think that can prove to be quite
As
dangerous.
soon as I see NASDAQ making new highs, I'm shorting every indice that isn't. That's my key. Also, I don't even have to know where the price is going to be in some other, sometimes you could find one thing that's going to be something that you could key off of for everything else. Like I had a view on yields.
On
Okay,
yields,
so
yes.
my view on yields gave me my idea in yen, which told me not to be short gold, and which told me to look for.
Speaking of yields, by
yeah.
the way, they're still tanking today. The 10-year yield is 2.12% lower. The 30-year one is 1.3% lower. So we still have this continuation lower after this
135 10-year is targets I've heard bandied about.
Yeah, I mean, anything is doable, especially if we get a lot of risk off. I mean, the initial reaction is definitely going to be getting the treasuries even more bid. Now, we have a question about crude, and actually that's a good question because we know how crude is also correlated with risk. Crude is definitely on the defensive. I mean, this has been quite an impulsive move lower. You should start being a little bit careful here because between 50.5 and 51.20, we have several areas of support. We have the 61.8% fee. We have horizontal support area. We have these triangles, ascending trend line support. You name it. We have these three previous lows. So we might see like another $1.5 of downside. But I would be looking for some kind of a rebound then before we can see more weakness. You already see a little bit of an RSI divergence as well. So the answer to the question is I'm still bearish crude, but if you don't already have a position here, I strongly advise you trying to sell it down here because there is no risk reward to do so. So I think that crude is probably going to remain under pressure, but probably a rebound towards 54 is going to be a selling opportunity, and not down here. And speaking of crude, that's Greek, we don't want that. Speaking of crude, natural gas also remains on the defensive. If you remember, we showed that the other day. Keep in mind that we have that low we had back in 2016, not much lower than we currently are. I mean, it's another 20 something cents lower. I do think that natural gas is probably going to produce a very nice buying opportunity, but not yet. I would be more keen in buying natural gas when the time comes to get the end of this sell-off than crude. Personally, that's my point of view.
Julia Cordova calls it Natalie. I said, why is it a she? And, she just, calls it a she. I said, well, for the bulls, it reminds me of a blues line. If you're going to walk all over my love, you can at least take your high heels off. What do you think of that blues line?
Okay, nice.
Huh?
No.
Ever have anyone walk all over your love with high heels?
Not specifically.
Oh, you haven't lived yet then, man.
So, last question, I think, and I'm assuming we don't have an interview today.
That's a good assumption.
Okay. So last question, the question was, what do I think about the Aussie USD? I think that this is now not the place you should be selling anymore. Why? Because we are very near retesting these lows, and as you see, the confluence with the head and shoulders formation target. All of those come around 0.6670.
But too early to buy.
Yeah, but too early to buy because we have no confirmation. So personally, I mean, if you were short, we had indicated this head and shoulders formation before it even broke down.
Nice.
If you shorted that, great. If not, this is not the place you want to be selling. Now, if you want to try to catch a falling knife, you can try being long here, against, let's say, 66 cents and, looking for a retest of, let's say, 68 cents, 68.10, 68.20. So, that's my viewpoint. Strong area of support. Now, there is the counter argument. If we do break through this 66.70, I think we're going to see more downside because there should be several stop losses down there. So I'm assuming a break below that should, quickly bring us towards 65, 64.50. 64.50, in fact, is the 161.8% extension of this rebound higher. So quite a natural target, to be looking for in case we see continued sell-off. And at the same time, two more instruments that we had questions on. The Kiwi has clearly broken below this ascending channel, so it remains on the defensive watch, 64 cents as the next area of support. And we also had a question about cryptocurrencies. If you remember, we warned in advance for the potential of cryptocurrencies to break higher, and they've been doing so. Initially, they broke through this trend line resistance. Ethereum had an equivalent one, and now Bitcoin has also broken above this channel. So definitely a bullish development. I think that above 9,000 we might see more upside, and here is also Ethereum at the same time breaking through that equivalent descending channel. So I do think that they look quite decent to produce more follow through to the upside. Now, I'm not a fundamental believer of how they can be doing, but that doesn't change the fact that I really believe in technical analysis, and I think that technical analysis clearly shows that the path of least resistance is to the upside for both of them. So, I can't advocate for anybody to be short at the moment, because I think it's the wrong, side of the market to be on. Thanks, Coach.
Okay.
Why don't you wrap it up? Okay,
everyone. Kitty. Okay,
yeah,
everyone.
Yeah. She really hates when I take her off me.
She's ready for the webinar to end too. So I want to thank everyone for hanging out with us. Steve, I had another great week hanging out with you and Blake and Stell here in Face and all our guests. And what a blessing it is to do something that's fun every day. And I hope you guys find it fun, not just about money, but that you enjoy yourselves when you're here with us. And thanks for putting up with my, strange sense of humor. The guys at ForexAnalytix are about to have put up with it for almost 3 years. So everyone have a great weekend. Tell the people that you love how you feel about them. They're not mind readers. And above all, even if you had a great week, which I think many did, being, into risk off stuff coming into this week, remember, it's your money now, not the house's money. But don't just count your cash, count your blessings. See everyone on Monday. Have a great weekend. Steve, thank you for your great analysis every day. And that's a wrap. So maybe you could just close the room, bro.
Am I the host? No, you're the host, Coach.
I'm the host?
Yeah, okay. I just checked.
Okay. I don't know. Huh. All right. Oh, here. View options. I can't. I don't think so.
Okay. Don't worry about it. I'm gonna reclaim host and do it.
Okay. I don't know. I'm so high tech. Okay, now I see it. Okay.
Bye-bye.